Hey, good evening. How you guys doing? All right, Jeffrey, welcome. Farzand is here. Rawlis, D'Angelo. I'm gonna pass Lou, Devon. Hey, Michael, how you doing? Frank, SC, Patty. All right, everybody wants to give their names called. That's nice. Rachel, Lorraine, Adil is here. Karen, how are you? Clement, welcome. All right, Tim. Okay, good. Let's get going. Disclaimer: nothing presented in this webinar, video presentation, vocally or visually, is to be taken as trading advice. All content of the video presentation is for educational purposes only. Trading involves risks, so always use discretionary funds when trading, and that's CFT 4.41. Okay, I have Doug with me here. He wants to make a couple of announcements before we get started. Doug? I appreciate it. Thanks, Doug. Okay, there you have it. All right, so exactly what Doug said. Okay, let's get going. So normally we start off the DMR looking at the news, right? So today was the WEF, right? Day three of the annual meetings, the financial meeting. Click on this little folder. It's the World Economic Forum. This is held in Davos, and it's attended by central bankers, prime ministers, finance ministers, and so on and so forth. So it's a pretty big one. Okay. The other big one is obviously monetary policy, ECB, and then crude. Okay. All right, and then tomorrow there's a lot of red news. Okay, there's flash, and then again 15 minutes afterwards you have the German flash. 30 minutes you have the real flash, and then you still have the meeting in Davos. All right, you got ECB, Lagarde is speaking, and then you got the pound flash. Right, Bank of Japan, Kuroda is speaking. Right, um, retail sales for the CAD. So U.S. session looks much better than London. Okay, because you don't really want to trade in front of those news because again they could be saying something, or it could be forecasts, and previous could be way off, and then the numbers are, with the numbers being way off, things could act a little crazy. All right. Okay. Let us take a look at some harmonics. Okay. So we're looking for. So we're gonna do the harmonics for this week, right? So that way we can see how to use the indicator with price action. Okay. So here's the first one. EA 4 hour, right? So if you look at EA 4 hour, there's a harmonic sitting here. Okay. So 4 hour harmonic, you do a 1 hour pattern, right? So I'm looking for a pattern on the 1 hour chart, right? So the box started right here, right? With hindsight, you'd be like, well, I'm going to take this trade right here. Well, that's not entirely true. So your first position is over here, all right? Your first candle that closed below the 13 is over here, all right? Now, of course, timing is a little bit off, and also you may have some sort of Aussie news at that time. So this one pushed it up. So you're not going to trade in front of that, okay? Ideally, TDI is correct out of the band, in the band. So this is more like an advanced pattern, but the candle is crappy. Okay, so that so you may say, okay, so here's my close below 13, back above, back below. I want to take this short right here. When this candle closes, I want to short it. Now, first things first, you got to measure the candle. All right. So if your candle, let's say, is 33 pips, all right, and the ADR, right? So if you look at EA, right, the ADR is 88 pips. Okay, 88 pips. So if your candle is 33 pips and your ADR is 88 pips, that's pretty much almost 30% of your ADR in one candle. All right. So when you have anything larger than 20% of ADR on a shift candle, you have to take the trade on a pullback. All right. You have to take a trade on the pullback. So the question is, well, what kind of pullback are you looking at? All right. So I'm looking at a 50% pullback before I'm interested in taking this trade. All right. So I'll put a pending right here. Boom. Now, of course, once price closes above the 13, that trade is done, right? You don't, because you have to, yeah, you want to take a short price below the 13. You don't want to take a short when price above the 13. Why? Because if you put your stop here, they're going to wick you out with this wick, and then they're going to widen the spread right at the high, right? And then they're going to widen that spread more than 3 pips, and they're going to take you out right there. Okay, so the entry has to be accurate. All right, so there is no entry on this one, right? So then it becomes 3 hits to the high. It's a variation of a head and shoulders. All right, so your next move is right here. You're waiting for price to close below 13, so your next move is right here. That shifts below. The TDI confirmation is RSI line below the signal line, below the market baseline. Now it does not pull back, right? So again, you measure this. It's about, let's say, 17 pips. All right, 17 pips is half of 33, 34 pips, which is this candle. So it's about 15% approximately. 15%, actually a little less than that, right? Because this is 17 pips, so it's about, yeah, let's say 15% of the candle. So if you did take a 1-1, that means you're going to fire the trade right here, and then 1/3 pull back, you fire another position. Okay, stop goes above there, 17 pips, and you got to make sure you're close enough to that. Why do I say that? Because what you do is when it gets to if you don't take your TP right at the water, you move your stop to break even and let price drop below that. Right. The other way to kill it is you kill this trade right here. If you're going for more, and if it doesn't do it, the minute it comes back, you got to close this position because the next move is coming back up. All right. So that's not bad. All right. No entry. This is a variation of a head and shoulder. We call it a 3 hits. 3 hits to the high, 3 hits to the low. All right. All right. Let's take a look at the next one. EN. Okay. 1 hour. So this one fired right here at the edge of the box. Not when you decide, it's when this box starts. So when this box starts, that's where the first leg begins, right here. So I'm looking, when this box starts, I'm looking for the outside the band. All right, which they gave me here. Then they gave me another outside the band, no divergence, but that is a M structure. Now, when I see a 50-200 pointing up, I don't want to short like this into it because price has to break through 2 EMAs, strong ones too. All right, so you want to only take this if you have enough distance, right? So let's say this 18 pips. From here to here, it's got to be close to 18 pips. All right, only 7. You're not taking this trade. Okay, you're not going to take that trade. You don't have enough distance to take that trade. All right. Okay, this is still active. Okay, let's take a look at GU. We were looking at this during the pre-market. Sorry, let's click on the 1 hour chart. Accidentally clicked on the 15. Oh boy. Come on. Sometimes it takes a little bit longer. I don't know why it's doing that. Shouldn't be doing that. All right. So here is the classic M structure. Okay. Close below 13, back above, back below. So here is the classic M structure. Same thing. You measure the candle. It's about a 25 pip candle, right? You look at the ADR, and let's say you decided, hey, you know what? It's about 20%. The candles, the shift candle, is about 20% of the ADR. So I'm going to enter my position at a 50% pullback. If it doesn't come, I missed the move. I missed the move. Okay. So now, if the candle, let's say you took this trade here, let's say it came back, it grabbed you here, and then it closed over here, you got to close that position. Just because you're slightly positive doesn't mean you're going to hold that position. The minute it closes above the 13, you got to kill it. Done. Okay. And then what you're looking for is a rollover. Sometimes they'll do the 3 hits to the high like that, close back above, come back below one more time. All right. These candles are crappy candles, so I would not take this trade. All right. If this candle right here has no wicks at the bottom and it looks something like that, absolutely, the short's right there. Stop goes right above that high. All right. The candle is crap. That's the pass. Okay. Okay. Let's see the next one. Here, GC. All right. So going to the 1 hour. So I'm looking for a close below the 13, back above, back below. So that's exactly what I got. Close below 13, back above, back below. TDI confirmation is RSI line is below the SIG line, below the market baseline. Absolutely perfect. You're short here. Now ideally, I like a little pullback into it, right? So let's see if it at least gave me a third pullback. Almost right there. Right. Some of you guys will put a pending there. I just prefer to drop the fib, and then as it gets right around there, I'll just fire the market order. Okay, I'll fire the market order right there. So you got about a 30 pip stop, and you're looking for 30 pip TP. Nice, right? So it's a 4-hour harmonic, a 1-hour pattern. We talk about a double harmonic where you have a 4-hour harmonic and you also have a 1-hour harmonic on your 1-hour chart, and then you try to take your trade on the 15-minute chart. It's pretty cool. Okay, we do talk about that as well. All right, the next one is GA. So same thing, 4-hour harmonic, 1-hour pattern. I am looking for a reason to go short, right? So this one did not give me a clean pattern. It did give me an advanced M, but the candle is too big in terms of the shift. Okay, so if that happens, when we talk about the 1-hour chart, we're looking to take another setup. All right, you can take an ID move. You can use the harmonic as an anchor, just in case if the anchor doesn't set up properly, your next move is an ID. All right, so this way it ensures that you know exactly what you're looking for every step of the way. Right, every step there is a setup. You need to know the setup. Okay. All right. Same thing. Let's take a look at this one, GF. All right. So here's my close below 13. Here's my back above. Here's my. This would have been a really nice close below. It just didn't close below. Right. Close below 13, back above, back. So this one's a little not as clean. Right. I would have preferred it to be something like that. Right. But if you did take this trade, right, you got a nice open jaw. RSI below, SIG line below the market baseline. Right. Now, fortunately, that's my shift candle. That did not close below 13, right? That one did. If you want to be aggressive, you got to put your stop above this by a couple of pips, 1 or 2 pips plus spread. Okay. If you're very conservative, you're going to put your stop above there, 24, 25 pips, and your target will be right there, right? When it taps the water, move your stop to break even, and then it goes 30 pips and it'll hit your TP for you. Okay. There's nothing else to it. The harmonic tells you where to look for your setup. Okay, same thing with GN. Got a nice 4-hour harmonic, the butterfly. I'm looking for a pattern. If this is not absolutely beautiful, I don't know what is. Close below 13, back above, back below. I want to short this right here. I drop the fib. Boom, right? 1/3 pull back footy, Why? Because this candle is huge. The candle's like a 50 pip candle. So I'm going to go in at a 50% pullback, which it does. Right? You want to get in within 3 candles, right? So boom, right there, and then you're done. Stop goes right above that 30 pip stop, 60 pip TP. Nice, 2 to 1. Okay. So as you can see, almost every single pair give you a set. If you don't know how to do this, that's what we're here for. All right. Nothing there, no harmonic. There's another harmonic here, dollar CAD. All right, 1 hour chart. I'm looking for a pattern. Okay. Now there is something that we haven't talked about. It's called an advanced stem structure, which you can only trade on the 1 hour chart, and that's exactly what that is. So price will not close below 13, back above, back below. It'll kind of stutter around here, but the TDI will create the M structure, right? And when they do the shift, which is right there, RSI is got to be below the signal line, below the market baseline, which it is. RSI is got to be below the signal line and also below the market baseline, which it is. Then what you do, you drop the fib, same deal. Candle is 20% of ADR, 50% pullback, bam, right there, 30 pips, and your stop goes right above there. 2 to 1, 15 pip stop. Right? So that's the nice takeaway for you guys today, since some of you guys did show up to see if you can learn something, and that's what you learned. All right, pretty easy. Yeah, they're the double harmonic system, which allows you to go down to the 15-minute chart. Can you manage it off the 1 hour or the 4 hour? The answer is yes, you can. You can enter on the 15 minutes and then manage off the 1 hour. Okay. All right. Let's see. Seems to be. Will the harmonic indicator work on the simulator? The answer is it does. It does work on the simulator. All right. There are some other questions. I'm sure Doug is going to be answering some of them. Some, you guys can hear me, right? It's not a problem with the sound and things like that. Everything is good. Okay, it's good. Okay. All right. Just want to make sure. All right, because there was some. It was slightly soft in London. All right. So harmonic's pretty simple, right? There were some very nice setups. Hopefully you grabbed some. Okay. Let us talk about the levels and the structure on the 1 hour chart. All right. So we were right here in London. Okay. So we measured this from here to here, and we were like, okay, it's about 100 pips. Right, so we are about approximately 30 pips shy of 3 times ADR. So we were in level 3. Why are we in level 3? Because I'm more than 2 times ADR. Right, 3 times ADR is level 3, 2 times ADR is level 2. So when I measured from here to here, right, I was sitting at 100, so it's more than 90. So I'm ideally in level 3, right? But we're expecting price to drop a little bit more into 3 times ADR. So if you measure from here to here now, it's approximately 135. Okay, so we were expecting price to drop a little bit, approximately 30 pips, to give us a nice clean level 3. The only problem is this was not very, the setup, there was no setup in here. All right, as you can see, it literally went sideways and then boom, ECB drop. You couldn't have taken, there was no setup in there. Okay, EJ, we were sitting in 2, we're looking for a reason to go short. As you can see with this pin, there was no way you could have taken this trade either. All right, so let us take a look on the 15 minutes to see if there's a potential setup early. All right, so it comes in. I don't have an AR move, right? I need a bounce off the water, right? It does do a move here, but you have to be careful with that 830 news. All right, so that is an AR move, a nice one, right? It whacked it. I mean, some of you guys may have even taken it at 9 after the news, right? But I probably wouldn't be comfortable taking that trade. Okay, it's almost like an AR safety. AR safety means it creates a little M structure on the water. It'll close below the 13, back above, back below, like that. It's like a little M structure in here. All right. EC. So EC, we were level 3. We're looking for them to drop. Okay, so 15 minutes. So you're looking for an M structure. Of course, you're waiting for the news to be done, right? So the way I like it, when they come up, they'll hit the news. I like a little trap and break in here. All right, a little trap and a break, which did not happen, and then it just continued dropping, straight drop. All right, the stop hunt was right here. That was the big stop hunt. But you can clearly see, even though that created a higher high, TDI is already dropping. So you know short's the better trade. All right, to me, that's not a setup I personally would trade. Okay. EA. EA was sitting in level 2. I was expecting price to go long in here. Right, there was a harmonic sitting down low. But I said to pass on this trade mainly because we were sitting between all those EMAs. All right, we're sitting between all those EMAs. So there's no set. All right. EN, we're sitting in level 2. We're looking for a reason to go short on this pair. All right. If level 2, we're looking for shorts, or if we're looking for longs, well, it was all scrunched in here. It looked more short than long because of these spins to the high, right? So let's look at it as a short potential. Now, to go short, ideally I want everything to be, if I want to take that trade, I want everything to be below all the EMAs. I don't want to be taking a trade somewhere in here. Let me blow it up a little. I don't want to be taking a trade somewhere in here. All right, because I have no idea if they're going to rattle around and stuff. So, excuse me, the cleanest setup is right here. All right, the cleanest setup is right here. It's almost like an AR move where they induced outside the Asian box, came back, whacked the water and the 50% of the Asian box, and rolled over. Right, and it did close below all the EMAs, so that would have been a nice little move. Okay, your stop is about 18 pips. By the time it came here, 12 pip, move your stop to break even, just in case it comes back up. All right, and then of course it hits your TP on there before the news. All right, so here's a nice little AR move. Would I be really interested in taking this trade? The answer is probably not, right? Because I got a 13 between the two EMAs, and most of the time when the 13 is between the EMA, they tend to rattle. They'll rattle back and forth. All right. GU. We already talked about the anchor move, right? And if you look at the 15, if you miss the anchor, you can always trade the ID move. ID is after the 1350 cross, the first pullback. This to me is a little too dirty, but again, that's my first pullback, right? A trapping move short. But this is a little too dirty because I got all these pins coming to it. If it was clean, in other words, it pulled off of it and came straight back up, it's over. Okay, so for an example, a clean classic example of an ID move would be, right, let's say I'm going long. No, that's a static bounce. Right, when you're looking for one, you don't find one, right? Almost like this, but the candle is too big, right? 1350 will cross. You see a nice little pocket here. You wait for the pullback and you short like this, but the candle is too big and the timing is a little late too. And you also got the blue tracer sitting in here, too tight. But again, if this was not there and this candle closed here, it's over. You pop it right there. Okay, you got to be clean, right? Not a whole bunch of pins because you don't know which one is going to move. Right? If you're like, well, I'm going to short on an inverted hammer. Well, here's an inverted hammer. Why didn't you short? Right? The reason you're picking here is because you can see what happened. But if you didn't, you'd be like, well, that looks good enough. Right? Now, some of you are like, well, I wouldn't take that there because I got a news coming up. Okay, that would make sense. Right? But keep it clean. Okay? GJ. That at level 2, I was expecting price to rise. Okay, so I'm expecting a long. So level 2, I'm looking for a W of the male. So literally a W of the male, and I'm waiting for price to rise above here after the second leg. So I got my out of the band, I got my in the band, I'm waiting for price to rise. It does not, it just stays below it and then it drops. Okay, I don't have a set. Okay, I don't have a set. As you can see, the previous day, classic example of an AR move. They induce, they come back, hit the 50% of the Asian box, the 50 EMA, close back above the 13 hour side, above the signal line, above the static, and then just go straight up. There's 99 pips over here, right? With a 15 pip stop. Okay, keep it clean, right? If it's not clean, don't take the trade. It's not worth it. GC, we already talked about the anchor move and the 1 hour trade. So sometimes the trade is off the 1 hour chart. It's okay. All right, this 13 is not crossed, so it cannot be an ID move, right? There's nothing there. It's the 1 hour trade. All right, the short's right there. GA. All right, so in level 3, remember level 3 or peak, you can trade both ways. You can trade short and you can trade long. So the only long I'll look for is a W of the male, right? If it's clean. If it's not clean, I am not touching it. All right, so this is an example of not clean, but if you notice, they held. That's why I don't like to trade between the EMAs, especially when the 200 is coming up and the 50 is coming down. Why? Because they tend to rattle back and forth. We just talked about that earlier. The only correct entry in all of this is right here, the shift candle, right? So if you look at the structure, let me change the color to black. It's a little bit easier to see, right? So here's my apex of this whole structure, right? You see how they close right above there? That makes it the shift candle. Fib this. I use fib in two ways, right? The one way obviously is this is actually the this is the only way to use the fib, right? I know some people use fib differently. They take it from the bottom to the top and then they look for a bounce over here, right? But I use the fib for my entries. So I fib the candle so that I can get a discounted entry, right? Think about it. When you go buy clothing or anything like that, or a car, you do not want to pay retail. Who wants to pay retail? Nobody wants to pay retail. You want to get a discount. Well, guess what? The market gives you discounts too, right? That's why some people are like, well, I want to take a long right in here, so I'm like, my stop is only 15 pips. So is mine. My stop is 15 pips too. If depending on how big this candle is. So if I measure this candle is 25 pips, right? So 14 pips would be 10%. 28 pips would be 20%. This is about 25 pips, almost 20%, right? So almost 20%. So what do? You drop the fib. Like I told you, I like to, instead of putting a pending order, sometimes I put pending. If I have multiple trades to take, if I just have that one trade, guess what? As this thing is pulling down, I'll fire that trade right there. The minute it gets almost on it or close to it, I'm going to fire the market order. Bam, right there. All right. Stop goes below the low, 15 pips. See, 15 pips, and I hit TP. More than that. Okay. I got the same stop as you would, except I got confirmation. When I get confirmation, I know my probability. My probability is higher compared to yours. All right. Just because you grabbed it 15 pips off the low of day doesn't mean it's going to run. But when I grab it, I got TDI confirmation and the release of trap volume. I know this is going to run. Okay. So you have to know the tipping point where the market is going to tip in your favor. All right. GN. All right. We already talked about this entry. Just absolutely beautiful. 1 hour trade. short, boom, right? Anchor, why is that an anchor? Got a harmonic and the blue tracer where they trapped the volume and then they did not release the trap volume and they shifted it off of it. Next move is an ID move, so I'm looking for them to come back. 1350 cross, first pull back, RSL line, below the signal line, the red line, and the static. That's the ID, the rules for an ID move. So I'm going to take this trade here, put my stop right there, 15 pip, bam, next move. All right. The structure is an anchor, an ID, and an AR. That's how it's supposed to go. All right. This is absolutely ugly, right? But if you notice, close below 13, back above, back below, candle a little ugly. Same thing. If the anchor is ugly, no big deal. My next move is an ID move. 1350 cross, first pullback, then IDAR, they also induced. See, that's the candle that closed below 13. None of these others did, right? That's why I see an inverted hammer. So what? Stop goes right above the swing point. Boom. Right, depending on the spread, you did or did not hit TP. Notice they even give you a discount. If you actually grab the discounted entry, look at it, right? Look at this. Doesn't matter what the size of the candle is, right? You're like, every candle I want to discount. See, it pulled back 1/3. It gives you a 30% discount. I like discounts, right? Put my stop above this swing point. Now you got a 4 or 5 pip stop. I definitely hit TP regardless of the spread. Okay, right? We talk a lot about the correct entries, the discounted entries, and how to take advantage of what you know. All right. Here's the classic advanced M structure. Right. Outside the band, inside the band, R stand below, signal line below the market baseline. Short. Boom. That's an advanced M. All right. So coming off from this move, they yank this up really hard. Okay, and they give you a ID move. Top goes below the shift candle, so that's my shift candle. Shift candle is any candle that goes above or below the 13 or an EMA. So this stop is only 4 pips. Done. Right. So just because you're trading a 15-minute chart doesn't mean you have to have a 15 or a 20 pip stop. Okay. If you enter correctly and you take the correct trades, you can still get 1, maybe even 2 to 1 risk reward, right? Depending on your skill set. All right, this was garbage. We said not to even look at this one, right? Because it's just it was just very sideways. All right, but again, if you're in level 2 and you're looking for a reason to go short, what am I looking for? Well, level 2 is an M and W off the Mayo, right? So I'm looking for a M structure coming off the Mayo. So for example, level 2 here, then M of the Mayo, or a half bat off the Mayo. So I measure the second leg to the first leg. If it's less than 10 pips, that creates an M structure. In this example, got to close above the 13, which it never did. So this is a half of that. So my entry is right there, going short. Stop is going to go above the shift candle. Here's an M structure. Close below 13, back above, back below. Price did close below the 13 here. Second leg nameable, the star formation. The band in the band, stop goes above the swing point, 8 pips. Right. The minute it comes to the EMAs, move your stop to break even. Done. Right. Why? I'm in level 2. I'm looking for a reason to go short. Level 2 shorts are, your anchor is an M and W off the Mayo. M off the Mayo. Ugly. See? So instead of you taking this trade right here in front, sometimes what you need to do is you hold this, and then when they break this area, you short it from here. Right? They did it again over here. Right? You gotta wait for them to trap, and then they take out the nadir. Level 1 safety, visible stop hunt, and then you go short. This one, there's no pattern in here. Okay? dollar Swiss. So we were sitting in level 2. We're looking for a reason to go long on this pair, right? Some of the guys that trade 1 hour 50-50 bounces, they were looking for shorts, but this candle is a spinning top. It's not a shift candle. All right, so it's a little bit dicey. If you're looking for longs, right, you're looking for longs, then well, you're looking for a W structure off the blue tracer. You didn't really get a clean W pattern. How do I know it's not a clean W pattern? I only got a one leg out of the band. I don't have in the band move. That's why. See, here the nice M structure, close below 13, back above, back below, right? On the band, in the band. That's the classic M structure. You go short. You need a classic W structure, which you don't have. You cannot go long. Why? Because M's and W's are reversal patterns. Now 1 hour had the W structure, out of the band, in the band, long. Problem, you got a big candle. You need a, this is a 24 pip candle, ADR is 44 pips. It's a big candle. You need a 50% pullback, which you never did, so you can't take that trade. Okay, dollar CAD, we talked about this. Gorgeous, right? Advanced M, the band, in the band. The rule of a pattern, or in terms of an M structure, has not changed, but the terminology of understanding an M structure has. Okay, so we can help you with that, give you more material and understanding of how to take these with high accuracy. All right, nice. Dollar yen, we're sitting in level 2. We're expecting price to come up, hit the stop high, roll over and drop, creating a M off the Mayo on the 15-minute chart. Now sometimes they do not give an M off the Mayo. They do not, right? A W structure in the middle of nowhere, it's a dangerous proposition. All right, the dangerous proposition, because there's nothing holding it. Now if this was sitting on a blue tracer or an EMA, different story. Okay, especially if there's enough distance. But if I'm in level 2, I'm looking for short, you ignore this move and you're looking for shorts in here. All right, obviously not before the news, right? So because it kind of all came right around the news area, so you have to ignore this move. It's an AR move, almost like an AR safety, but you got to stop trading at 8 o'clock. That's 8:15. You cannot take that trade. Okay, you may have taken the first one here at an AR, kind of like AR00, but the minute close above the 13, you got to kill it, minus 2 pips. All right, always. That's how you manage your trade and keep your scratches tight. You got to keep your scratches tight. All right, and finally euro pound, we were sitting in level 3. We're expecting price to go a little bit lower. All right, so in level 3, I'm looking for longs at the blue tracer, or I'm looking for an M off the Mayo, trading back to the peak. Everything else is nothing. All right, everything else is nothing. Okay, I'm sure there's a lot of questions in here. Let me just quickly see what fib levels you have. I have a 1/3, which is a 33%, and a 50%. So my fib is very different than all the other fibs you guys use. As you can see, if I do a fib property, I got the 0 I got a 33, which is the 1/3 pullback. I got a 50% and a 1% and 100%. That's it. I don't have all the extensions and all the other fun stuff that people use. I don't use fib in that sense. I use fib so that I can get my best entry. All right, I know people trade with fibs, but that's just not my forte. Okay, how do you get the levels? You have to draw them. So literally I sit here and I draw these. I know they look perfect, right? In terms of like, look at these little boxes, the little verbiage. I know you have to sit there and learn how to draw the levels. Your levels is your bias. Your bias is your most important advantage you have in the market. You know which direction it's gonna go, right? Otherwise, you're going long, the market is going short. You're going short, the market is going long, right? A lot of people will be like, okay, cool. Here is where I want to go long because there's something to the left here. There's the blue tracer, there's trap volume. I'm looking for longs here, right? So what do? You go long here. You make some stuff up. You're like, all right, cool. Here it looks like a W structure. Out of the band, in the band, bam, I'm going long right here. Rolls right over. Not only does it close below 13, you won't get out. It Once it shifts through, then you're like, uh-oh, I'm stopped out, right? But I'm not looking for longs. I'm in level 2 short. I'm looking for shorts. I'm looking to trade this way, not that way. So if you get your bias correct, you should do pretty well. If you get your bias wrong, you're going to get smacked, right? Now, I'm sure you've not only attended Steve's sessions, I'm sure you've also attended other people's sessions for those people who are listening in on the first time, right? You've listened to other people, other gurus, and this and that. And some people, all of them will tell you it's so easy. Do this and you're going to make money, right? That's not the truth, okay? It's not the truth. It takes time, it takes effort, it takes work. That is the truth. Just because you're going to take a course doesn't mean in 2 months you're going to be a millionaire. It does not work like that, right? Unless you have a lot of experience and you have one missing piece, which is the levels or the buyers or something. You're missing one little piece and you've been doing it for a while. That's the only exception, right? It does take time and you have to put it in. Just like a master's degree, right? Think about it. You're trading against the best traders in the world, the market makers. They've been doing this after a 5-year apprentice a position. They have to put in 5 years earning a regular salary. They're not getting bonuses. Maybe they do get a little bit of bonus, right? But that's what they do. They have to put in 5 years and then they will get something potentially. If somebody retires or somebody gets promoted or something, that the position opens up, boom, they'll up. Then think about it. Every broker is going to have a couple of apprentices. Each one is going to apply for the position, right? So if that broker or the market maker has 5 apprentices and one open position, doesn't mean you're going to get it, right? But the point being is you're competing against the best of the best. They are the master. They have a master's degree in this, right? You cannot compete against them if you're a novice. You have to become a master at this. The question is, can you become a master at this over here? And the answer is you can. All right, you can. It will take time. It will take effort, a lot of it. At some point, you're going to start dreaming charts. You're going to start dreaming charts. You're going to be in the mall with your family, wife, kids, if you're married, right? And you're going to be thinking about charts, right? Christmas time comes, they're shopping, you're sitting outside waiting for them, you're thinking about charts. It has to become an obsession, okay? Osmosis is not a way of learning how to trade. It does not work like that. I can ask you right now, and let me see how you can think about this answer. Do you know your stats on your setup? You got to know your stats. Stat means statistics. You have to know your hit rate. You have to know the real number on your setup. What do I mean by real number? When you do your stats, you're going to have positive trades and negative trades. You have to record both of them on an Excel spreadsheet. Then, right, you calculate your hit ratio. You're like, all right, so my positive, right, I have all my positive, and then I have my total, and then you divide the two and you get a percentage hit ratio. then if you take the positive and you subtract the negative, you have something called a real number. The real number will tell you these are the number of trades you're going to make money on, net net. All right. The net net number is a good number. Why? Because if you're trading 1%, well, you're going to make that number. If you're trading 2%, well, you take that number, multiply by 2, right? But you have to trade percentage of account in order for the scalability of this business to work for you. What do I mean by that? Scalability is you do the same thing except you're making money multiple folds. You scale up. All right. This is one of very few businesses you can scale up. Okay, I have friends that play poker and things like that. It's not scalable. Very hard to scale up. Why? Because when you go from playing $100 table to $1,000 table, the people at the $1,000 table is way better than you. When you come up from the $100 to the $1,000 table, they're going to take your money, so you're going to lose for a while before your skills increase and then you catch up with those guys. Forex, you don't have that problem. The market makers are set. They're already good. When you come in, they're already good. Why? Because they make money the same way. That's why they create patterns. That's why they create levels. That's why they create structures. Right? Understanding the structure and the market and the way the market moves helps you make money. Okay, so let's see what some of the, sorry, sometimes I go off in a tangent, but hopefully that's is still good stuff, right? Lou, I'm not going to answer that question. So they try to knock people out before going to the next level. Yeah, that's the point. That is the point. They will try to knock you out. They'll try to shake you out. They'll try to hold the market and shake you out before they move, right? But if you're trading a set, it wouldn't matter. You're like, that's my set, I'm going to take it, because you already know your statistics. You already know your win-loss ratio, your hit ratio, your hit rate. And obviously you're going to trade a hit rate which is high enough for you to make money. If you have a 30% hit rate, you shouldn't be trading it, because 70% of the time you're going to lose, right? That's why all these books say, well, if you lose, lose little. But how about if you try not to lose, right? How about the stats the other way? 70-30. Your hit rate is 70, so 7 out of 10 times you're going to win. Not 30 out of 10, 30%, or 3 out of 10 times you're winning. That's crazy. And that's why they give you have to go 3 to 1, right? That's why they tell you got to go 3 to 1 if you want to make money. Yeah, if you're only 30% accurate, you have to go 3 to 1, otherwise you're going to get smoked. Do you personally see the market makers interacting with the water on in level 3? Absolutely. They will interact with the water in level 3. Here the peak high, here the level 3, they interact with water. Here the level 3, right? Well, this is because of this big move with news, right? They dropped 230 pips. See, 3 times the ADR is, let's say, 160 in this example. Look at this drop, boom, right? 200 something pips. Guess what? They came back and interacted with water. Guess what? That is a 1 hour 50-50 bounce. You're shorting right there going short. Why? Because you know your stats. You know that that's the next setup. Okay. All right. So let's see here. Based on your experience and knowledge, can you advise on trading the news? Uh, why is it advised to go against the news? Because the news, I'll tell you why. All right. Trade news with a live account. put a micro in it and see what happens. Okay, first of all, they will widen the spread, right? So a normal spread on euro dollar, let's say, is, I don't know, quarter of a percent, half a percent, right? They'll widen it to 3, 4, 5% right in front of the news. They'll widen it, right? Second of all, if you read the documents they send you, they say in a fast market, which is in front of the news, they don't have to, everything is off. That means you cannot sue them if they take all your money in one shot, right? And that's exactly what they will do. Third of all, when you're trading news, you're gambling. You're like, okay, it's going to go long. I know it's going to go long. You don't know anything. Nobody knows. I don't know. You don't know. Nobody knows what they're going to do. I've seen the news comes out positive and the market drops. Why? Because their money is sitting on, they are net short. They want to go short. The news is positive, they're going short. Then you come up with some other reason that they went short. Well, because it's priced in, because the price movement is priced into, into the market already. The news is priced into the market already. All that BS, right? You start coming up with all these different stories. No, it's all about where the money is sitting, right? If they're net short and the news comes out positive, they're still going short. They don't care about the news. They want you to go buy and they'll sell it to you and then they'll drop it. Okay? So it's gambling. Don't gamble. Do not gamble. Let me go quickly into the lesson I want to cover today really quickly, and then after that we can take some more Q&A. Okay? All right. So what we're covering so far, we've been covering in the DMR. Last year we pretty much covered all the bounce trades, continuation trades. So this year we're covering anchor moves. But before we cover anchor moves or setups, we need to know what a reversal pattern is. All right. So we have the M's and W's, we have the half a bat, we have the head and shoulders, which is the variation of the 3 hits to the high or low, and the 3 drives pattern. Okay. Then we have combo patterns that I came up with that we will cover closer to the middle of the year, which is called a second leg half a bat. So you create an M structure and then you create a half a bat along with the M structure. Okay. So for example, this is a classic W structure, right? Why is it a classic W structure? Because it closed above the 13, back below, and then back above, creating a out the band in the band. If it closed above the 13, back below, back above, does it need to create a out of the band in the band? The answer is no, it does not. All right. For example, here is a classic M structure, right? So I got an out of the band, and then I got a little in the band in here, going short, right? So if you get your discounted entry, you got an 8 pip stop, easily hit TP. If you took your trade here and now you're too tight, stop is much larger, 10, 11 pips, you did not hit TP, you got held by the spread. Okay? Classic W of the man. Give me a second, let me drink a little bit of water. Right? So you're like, well, this could be an M, this could be an M, and all these could be an M's. It could, but it's not. Why is that? Remember, a structure or a anchor pattern creates a out of the band in the band. And none of these at the high, that's the high, that's the high, that create a higher high, that's the create a higher high. The higher high should create an outside the band, inside the band. That's the only one that did it. And it cleared all the EMAs. So you short from here. Your stops goes above the shift candle. That never closed below the 13. Let's presume that one did. Then you got to put your stop above this. If this one closed above the 13 coming below, your stop can go above this. Okay? See? Blue tracer. The 12 setup. Close below 13, back above, back below. Get a little discounted entry. Okay? Beautiful shift candle, no wicks. Perfect. Wait, hold on. Right to the pin. Drop the fib. drop the position, 18 pips, boom. Okay, whoops, right? Ugly W, close above 13, back below, back above, long. Can the second leg be below the first leg? The answer is yes, it can. Okay, it can. No more than 4 candles, right? So you got out of the band, that's my in the band, that's my long. W of the male, right? Not my favorite, but it was just a pattern we're talking about. Big news, drop, they consolidate. Collect contracts from one session to the next. See, they close above 13, induce those people that take advanced W's to go long, come back below, and then they shift and then they go long from here, right? Out of the band, in the band. When will I look for in the band? Once it closes above the 13 and comes back below, that's when I start looking for my in the band. Okay, see, you're like, well, that's the half a bat. Well, you're going to measure from the second leg. When is the second leg created? When it goes above the 13 and comes back below. Once it comes back below, that's when my second leg starts. Then I'm waiting for it to close back above for the completion of the second leg, right? So I measure from here down here, it's less than 10 pips. That makes it a W structure. I know it's a little half a bat than W, but that's what you got, right? Same deal, R side above the signal line above the market baseline long. Right? Low ADR pairs measure, that's only about 3.5 pips, that's an M structure. Close below 13, back above, back below, on the band, in the band, short. Followed by 1350 cross, first pull back, give me a discounted entry, short, top goes above this candle, right? That's an ID move, IDR combo, right? We covered all of that last year. So guess what? You're 1 year behind, right? After the IDR combo, they induced and they came back and gave you a next move in here, short. Top goes above this candle, right? Check this out. Big fat M. Time of day is wrong. That's why you cannot trade whenever you want to trade. You got to trade when the market is moving. All right, so that's an M. Not the best. Why? Because I don't have out of the band, in the band, right? So it's kind of went sideways. But notice the blue tracer. Close below 13, back above, back below. So you're like, well, why can't I take this trade here? You can't. The black line got to be below the yellow line before you take that trade. You can't just take the trade whenever you want to take. You got to trade RSI line below the red line, below the yellow line, the market baseline. That's why you will not be able to take that trade there. You can only take this trade here. Now think about it. I like a discount, so most of my entries will be a 1/3 pullback. If the candle is like 20% of ADR, then my entry, my second position is going to sit at the 50%. Okay, so let's presume this candle, I don't have the ADR, I do have the ADR, 47 pips. Okay, so this one is approximately 7.5 pips, right? So 7.5 pips, and this is 47 pips, so it's not 9 pips, which is 20%, a little bit more. So what I would do is I would go, okay, you know what, instead of going 50%, let me put my trade here on the 1/3 pullback, right? So now here I got a 6 pip stop. So I'm measuring from here to here is approximately 6 pips, right? So what do? You move your stop to break even once it touches the water, and it goes below it and gives it to you, right? But if you took this trade here and it comes here and you move your stop to break even, when they come back up here, they'll widen the spread and it'll take you out of break even, right? That's why this entry is much better, because it's approximately like 2 pips. Again, we have to see what the spread is on this pair. If it's more than that, then you have to leave your stop right above there, 50%. But if it didn't come back to 50%, they usually won't come back to 50%. They usually come back to the bottom of this candle to take you out. Okay. All right. You can trade the pattern on the 1 hour chart, the same thing. All right. It's the same thing. Get the pattern here. The second leg happens to be a quarter wood. Will you know beforehand they're going to give you a quarter wood? The answer is you do not know. So your correct entry is right there because you didn't know this is going to close like that. Unless there's news, of course. If there's news, you don't take that trade in front of the news. Right? You'll take this trade. It's going to drop about 7 pips. Your stop is about 9 pips. Excuse me, if you don't close the position, it'll take you out of break even or it'll stop you out. It rolls over. This is the quarter wood. Quarter wood is double set of railroad tracks. You pop the trade again. As long as RSI is still below signal and below the market baseline. Right? Here the close below 13, back above, back below. Beautiful shift candle. Stop goes above the shift candle, and you're on your way. See? That's the classic out band in the band move. All right. Last one. Same move. Close below 13. They go back above and they go back below. It grazes the outside the band, inside the band. These are really, really nice. Stop goes above the shift candle. Boom. All right. That's all they got. You're like, well, why can't I short here? You don't want to short there. End of the day is right here. You're going to pay swap, right? You don't want to short there. Why? Also, it's beginning of session false move. They're going to come back this direction before they shift. All right. End of session false move, beginning of session false move. That's why false move, trend run. If I'm looking for shorts in level 3, false move is up, they drop. Okay. Let's see. Thank you, Doug, for answering most of these questions. That's really, really. How you identify a reset? That's the whole session on of itself. We do have material in the DMR that covers resets. It's the 3-session conversation on resets. Pretty much, remember, levels happen on all time frames. But think about it. When I'm going from level 2 to level 3, I need to have a reset on the level on the 1 hour chart, right? Otherwise, it cannot go from one level to the next level, because then I'll have level 3, level 4, level 5, level 6 on the 1 hour chart. So that's what the reset is for. Okay, it resets your count, right? So you have to do levels on the 4 hour as well as levels on the 1 hour chart. And as it moves from one level to the next, from 4 hour, it'll create resets along the way on the 1 hour chart. That's how the resets are created. Okay. What are the top 3 peak identifiers? I'm still having a hard time seeing level 3. All right. The easiest way to identify level 3 is use harmonics. Okay. Use a harmonic. Second, use your ADR. Right. Use the ADR. And always understand, most of the time, level 2, if you're coming off an anchor move with a, coming this way, right, as you can see, usually with a 5200 cross, you have a level 2 move, right? But if it resets and 5200 does not cross, you won't be able to identify a level 2, right? There are actually 3 to 4 different ways of identifying levels. One is using the EMA crosses, one is using the ADR, one is using the Asian box when they stack on top of each other. Right? That's the other way to do it. Can you explain the significance of the 800 EMA on all time frames? It's not really necessary to know the 800 EMA on all time frames. The one that's important is the one you're doing levels on, the 1 hour chart, because the 1 hour blueberry, right, should be the Mayo on the 4 hour. Because we're not going higher than the 4 hour, we don't really look at the blueberry on the 4 hour. All right. So then the 200 EMA becomes the blueberry on the 15 minutes. Close, not exactly to it, but close enough. Okay, that's why it's significant, and that's why it's important, because the 200 EMA on the next high, the blueberry, the 200 EMA on the next high time frame. Okay. All right. All right. Let's see. He speaks too fast. Oh well. I presume you're talking about Steve, man. I pause in between each word. All right. Does it work on the US 30? Yes, it will. When you say inside the band, the black line have to cross the static 50 or the red line. Inside the band. Okay, so for example, right? Let's look at a cleaner one. Okay, that's inside the band. That means this goes outside the volatility band, and the next one's got to stay inside the volatility band. So in other words, the black line is going to crisscross the red line, come back above the red line, then go below the red line. Okay, that's when you get your confirmation. Same thing over here. It's outside the band, crisscross the red line, goes back above the red line, comes back below the red line. Outside the band, inside the band. Okay, outside the band, once it closes above the 13 and comes back below, I'm looking for my inside the band. You're like, well, what about this? It doesn't matter because price never closed above the 13 over here. It can go wiggle back and forth, back and forth. I don't really care until this happens. Then I'm looking for my second leg, which is inside the band. Okay. So between now and Sunday, do some homework. So when we start talking about this stuff, at least you're like, oh, okay, cool. You talked about this. Actually, it makes sense. I see him. All right. Um, is the use of the EMA accurate in counting levels? Yes and no. Because like I said, when they reset, when they throw in a reset in here, right? If it goes 1 2 3, 1 2 3, 1 2, it doesn't matter, right? It's easy. What happens when they do this, right? They go 1 2 3, they come down, they reset, they jump back up quickly. So from here to here, it gives you 3 times ADR. They come back down 2 levels and then they jump back up again. You can't use the EMAs at that time. So you'll have to use ADR. You'll have to use the Asian stacking. All right. You mentioned that there are 3 different ways to identify levels. Which way is the best? The easiest way is the ADR. The easiest way to identify it is the ADR. All right, Ed, thanks for the kind words, bud. Baseline have to be above RSI line and price on an M setup. Not baseline. Baseline is not even, that's not even in part of the consideration. Okay, so here's the W. Why that's the W? Here's my outside the band. I told you I don't really care about outside the band, inside the band, and long over here, unless I'm taking an advanced move. But I can't really take an advanced move here because the black line's got to be above the yellow line before I take any trade. All right, so here's my close above 13. Once it closes back below the 13, I'm looking for my second leg. Right here is my second leg. Then I'm waiting for price to close above all the EMAs, ideally, and RSI line, the black line is above the red line, above the yellow line, in exactly in that order for a long. Then I'll wait for my pullback, and I'm going to take my trade long from here. That is the W of the Mayo. This is an advanced W, right? Of course, I can't take that trade there because the black line is not above the yellow line. So I have to take my trade here. The black line now is above the yellow line and it's already crossed the red line down here. I do have R the band, in the band. That's an advanced W. right? All right. Um, is there any news rule you discovered? News rule or new? On the 1 hour 50-50 bounce and the ID safety? Nope, that's it. How do you place the three lines in the Asian box? Oh, it's an indicator. You just have to activate it. I'm not going to do that mainly because my computer is a little temperamental. But yeah, these three lines is in the settings of the work time. Okay, it's inside the settings. You just have to activate it. All right. All right. What are you using for TDI? I'm using the standard one that comes in the box, man. I don't change my TDI. I think this is what, 21. The RSL line is 21. I don't know. I never change any of the stuff. This is whatever comes out of that box from TDI World. That's the one I'm using. Okay. Oh, Derek, appreciate it. Thanks for the kind words, bud. Next webinar is at 8 p.m. No, the next webinar is going to be at 2:30 Eastern, the pre-market. Doug and Jim do their pre-market after the DMR. I do mine right before we trade. Okay, right before we trade, 2:30 a.m. Eastern. I do mine Thursdays and Fridays, and my DMR is 7 p.m. on Thursdays. All right. Let's see. At what point do you give up on level 3? What should happen to make you believe your level 3 is broken? Okay, that's a good question, right? If, let's say, for example, from here to here, I'm saying that's my level 3. All right. Now, for those people who've been in the DMR and with me for a long time, uh, they kind of know that I've been doing this long enough that my levels are pretty accurate. I would say 80% of the time I'm accurate. I won't say 100%, never 100%, right? So if you notice, this is 387 pips, right? You see that? The middle number, 3871, 387 pips, right? So 326 is 3 times ADR, all right? So obviously when I'm here, I'm about 190, right? So I'm in level 2, but not completion of 2 times ADR, right? So 2 times ADR would be what? 216, right? So this is only 190, so I'm not 2 times ADR, but I'm inside the range of a level 2. So this makes it a little bit easier. So once I'm past level 2, I'm in level 3, right? Once it breaks 216, let's say 220, I'm going to be in level 3 regardless of where the price is. But when it breaks above 3 times ADR, then I'm kind of certain that, hey, a reversal is imminent. It's more than 3 times ADR. They're going to pull back into the range. Second of all, the harmonic is telling me, hey, the probability of this going short is much more higher than it's going long. So I'm using confluence of events, 3 times ADR, all that stuff put together to determine where the potential reversal area is coming in. Same thing here, coming down. So if I measure from here to here, I'm approximately 300 and let's say 305, right? So I'm a little shy of 3 times ADR. Okay, I'm a little shy of 3 times ADR. Now I told you level 3 is not where I like to engage trading. I'll trade back to the peak, but I won't trade long from here unless they give me a beautiful pattern with a harmonic sitting down there. All right, so for example, there's the harmonic with a beautiful pattern sitting up here. I'll trade it. Level 3, no harmonic, no beautiful pattern. I am not touching it, even if you paid me, because I'm going to get stopped out. And that's real talk, right? Okay. So Here's an example of a peak. So I'm measuring from here to here. Let's say from here to here, right? I don't know what the 700 pips, but anyway, I'm in level 3, for example, right? And it drops more. So I told you in level 3, let's say I'm in level 3. I don't want to trade long because I don't see a 1 hour pattern in here. Okay, maybe right here. Close above 13, back below, back above. What's missing? My TDI. I don't have out of the band, in the band move in here. So this, even though it did go long, would not be something I'm interested in. What am I interested in? The short. Why? Because I told you in level 3 I will trade back to the bottom if they give me a set. Right? This happens to be a 1 hour 50-50 bounce. Short. Or I will trade an M and W off the male on the 15-minute chart back to the peak. See? Close below 13, back above, back below. That's a half a bat. Why is that half a bat? The distance from here to here is more than 10 pips. It's 40 pips. Right? That's why TDI is out of the band, out of the band. So that's not really an out of the band as in an M structure. Normally out of the band in the band creates the M structure. So if you get out of the band, sometimes we'll give you a half a bat, because half a bat is usually a shark fin. Half a bat. Right? And not only that, this candle is very big. So you need a 50% pullback, which as you can see is about half the size of this candle. Right there. See? It went a little bit above it. Top goes above here. 15 pips. From here to here, about 15 pips. I'm going to take it, move my stop to break even. And then it drops 90 something pips. Right? Okay? And then what? If you miss this move, you're like, well, it's too far above the male. I don't want to take this, blah, blah, blah. It's too late. No problem. I'm still in level 3. I'm still going to take an M off the male. Right? Out of the band, in the band. The shift, I'm going to short from here. Okay? If it comes within 1 pip of this, is usually because they just want to hold the high. Right? We talk about things that is called a reload. The reload kind of identifies the intraday anchor for you. All right, I've done a whole session on that, so that kind of helps. And so it'll kind of tell you, hey, that is my anchor. How do I know? Because of the reload. Again, that was kind of discovered from marking charts. Okay. All right, let's see. Do you do your analysis on a demo account and trade on another platform? No, I do my analysis on the live platform, which is the one I'm trading on. All right, so I do have a live account that so in other words, I have multiple platforms on the live account. You're like, well, why would you want to do that? The one I'm executing my trades on, I don't have all this other stuff on it. I have very minimal stuff on it. I won't have all these things on it because it slows that platform down. So I just have very minimal stuff on it just so I can execute. That's it. That platform is used for execution only. So I will have accounts, multiple accounts of the same platform, right? So you open up 2 or 3 live accounts with the same broker, right? And then you have your information on there, so you're looking at the same thing on multiple platforms, and then you just have one on the side that you just want to execute with none of this other stuff, so it doesn't slow it down. Okay, hope that makes sense. Lou, appreciate it. Thanks, bud. John, thank you. Please repeat part of the RSI line baseline. Okay, so what I'm saying is RSI line, like for any M structure, for example, right? So let's find another M structure or W structure, right? Here's an advanced W, right? So let's not do that. You know what? Let's find one that's already done. Let's look at the 15-minute chart. No, you know what? Here. Sorry. All right. right? So let's look at an M structure here, right? The deal is you get out of the band for the first leg, price closes below the 13, just like how you see that the 13 EMA is red, right? You see the signal line is red. So this one closes below the 13, comes back above, comes back below, right? The black line goes is below the catch up, the 13 right here. The red lines represent the 13, back above, back below. It does the same move as this, right? Here price got to close below the 13. Here price does close below catch up, but the only other caveat is it got to close below the market baseline, the yellow line, right? So there's nothing in the way. It's free run all the way to the other side of the band. Okay. What is the setup in level 2? M then W's off the Mayo, and of course the ID and then the AR move. Discount discount entry. Cool. All right. Okay. So some people are asking about the cost of the DMR and things like that. So please contact Doug. Right. Uh, info at beatthemarketmaker.com. All right. Info at beatthemarketmaker, no s.com. Okay. Let's see. Can you show an example of how you identify a reset? Yeah, we could probably do that really quickly. You got to do the 4-hour levels. Without that, doesn't mean anything, right? So think about this. For example, I'm going from level 2 to level 3. Okay, GU. So this happens to be December 11th, right? So if you go to December 11th on GU, right? So let's shrink this down. December 11th. Okay, so here. Okay, you are here. One big move into a level 3. I'm expecting a reset in here, right? The water is the Mayo on the 1-hour chart. So I got whatever number of levels of rise, and then they come down, they smack it, and then they go from one level to the next. That's how you get your reset. So same thing over here. I got a little reset in here, right? If you look at the 4-hour chart, that happens to be November 26th, right? So I get a 1350 cross. So it's very easy to see 1350 cross level 1, because 1350 cross is level 1, 5200 cross is level 2, right? But when they do a reset, you're not going to get a 5200 cross because it's already crossed way back then. But it'll still do a 1350 cross. So when the 1350 crosses and they go up and then they come back down, it creates that high where the consolidation is going to happen. So everything in here is level 1. But you know from level 1 to level 2, it's going to do a reset. So when they create the reset, see, notice 1350 cross, this is level 1, 5200 cross is level 2. So theoretically, I'm sitting in level 2. I'm expecting price to go down to the blueberry. When does it change? Well, it doesn't change when 1315 crosses, because 1350 crosses all the time. It changes when the 5200 crosses back up, which is the 1350 cross on the 4-hour chart, right? When that crosses, we call this the golden cross, the 5200 cross, right? When that crosses, it locks this move, and then it starts pushing up again. All right, so hopefully that made sense. How do I access the forum? Well, the forum is for registered student, so you have to be a student in order to access all the other videos that we've done, excuse me, throughout the years. All right, there's a lot of material. Again, not because I did it and Jim and Doug and Steve did it. Is because there's a lot of value in there. All right, it's information over the years, through experience and through homework, and we share all that with you. All right, so there is some sort of value add, and it's definitely going to help your learning curve. Okay. Does it work on the exotic pairs? Absolutely it does. But the spreads are a little bit bigger, so you have to be careful. Okay. Also the volatility a little bit. All right. Do you trade the indexes? No. All right. So if you guys are interested, please contact info at beatthemarketmaker, no s, right? Beatthemarketmaker.com. And Doug will be happy to talk to you about it and send you information on how to be a part of the BTMM family. All right. Okay, one other thing, question about GJ. All right, so GJ is sitting in level 2, right? So think about this. If I'm in level 2, I'm looking for longs, I'm not looking for shorts, right? So that means if I don't have a long setup, which is the W of the male, I won't be taking that trade. No trade. Okay. If I'm level 2 long, I'm not going to go short. That's crazy. It's like your indicator is telling you, oh, you need to make a right to get home, but you're like, nope, I'm going to go left. You're not going to do that, right? Why would you do that? All right. What is the hit rate of a 1 hour 50-50 bounce? It's very high. It's a very high hit rate. Okay. But you have to do homework to find out what the hit rate is. I'll tell you why, because my chart vision is different than yours. I might pass on certain trades that you might take, mainly because I may be using other things like fractional disparity and things like that, right? If I feel that a certain pair is moving because of pound, but pound is sitting right on the Mayo, I might not take that trade, even though it follows the rules. All right, so there are certain variables that comes with experience as well. All right, Jacob, thank you very much. What's your favorite pair? Euro and pounds. Euro and pounds. Okay, Frank, thank you. How many stop loss pips can be put on the 1 hour? So whatever my shift candle is, so for example, if I'm taking a trade on the 1 hour chart, like not like that, like this for example, right? I'm gonna put, you have to put your stop above this. So normally you'll put it 1 pip plus spread. So if it goes 1 pip plus spread, okay, some people put 2 pip plus spread, depending how comfortable you are with the pullback, right? I'm getting a discounted entry anyway, so most of the time it'll go slightly above me by a couple of pips and then it's just going to drop like that. I know what you asked me, Diax. That's for you to find out, man. You got to do the homework and find out, but I can tell you it's very high. Yo. Okay, great. So let's do that, right? A new student will come in, right? The first thing they will do is they will do the 4-day course, right? The Steve's 4-day course. You have to get the basic material in. Once you get the basic material in, then there's something called a boot camp and charter school, which is also taught by Steve. So you're gonna go ahead and do that. There is a little, under the 4-day course, there's a little thing. What do you do next for a new student? You just kind of read that, and it'll tell you pretty much what I'm telling you right now. So you take the course, you do the charter school, you do the boot camp. So that's all done by Steve. Once you get that done, then what you're supposed to do next is take 10 classes, go back and look at 10 classes, right? Of Jim's, 10 of Doug's, 10 of mine, okay? And you can even do 10 of Steve's, right? And then you're going to make a decision based on how you trade, which instructor you're going to follow. Okay, I think that's very important because you need, if you have a certain style of trading, let's say you like to trade more like a longer term trading and you want to follow Doug, for example, right? You need to internalize all his material because Jim does 1 minute stuff, and Doug does a little bit higher. He looks for the peak structure on a higher time frame. He may enter on the 1 minute, but I'm just saying his outlook is a little bit bigger. You want to absorb the material that he is giving you first. Okay, that way you're not confused, because that's what most students tell me. It's like, well, I'm kind of confused because I'm listening to you and Jim and Doug, and I'm all over the place, and I really have no idea which direction I'm going to go. Okay, so that's what you got to do. Take 10 classes, Jim, Doug, Steve, and myself, and then make a decision on which one you want to follow. All right, the best thing, my suggestion to you, is follow one instructor, learn all the material, and then start doing homework. Now, I already told you how to do the homework kind of briefly. With my style, for example, I can only speak for my style because that's how I do things, right? And I'm sure Doug, mentioned it when he was talking about it. When you're trading my style, for example, I do it based on setups. Okay, so I'm like, when this happens and this happens and it looks like this is what you do. That's usually is more a cookie cutter. This is how you do it, this is how you do it, this is how you do it. It's got to look like this. And that's when you create these flashcards. You like create the flashcards, and then what you're going to notice is it's almost very similar. This one looks almost like this one, looks almost like that one, looks almost like that. All right, so you will decide after you go through all my material what your setup is going to be. We call it the signature. What your signature trade is. All right, you pick one to begin with, and you follow it, and you do homework on it, and you know the stats. All right, people are asking me about the stats. You got to figure that out. You got to know what your stats is, because your chart vision is different than mine. Not because I don't want to give it to you, it's because mine could be a little better than yours, or mine could be a little bit worse than yours. Okay, it's how you see the market. So you're going to mark the chart based on your chart vision. And over time, you're going to realize your chart vision is going to improve, because you're like, oh, that looks the same, man. That looks the same. That looks the same. That looks the same. You're going to create 300 flashcards, and you're going to start looking at it. One day, you're going to sit there, you're bored out of your mind. Nothing's going on. You're sitting in a coffee shop. It's a Saturday evening, Sunday evening, whatever, Sunday afternoon, and you're just scrolling through you have your iPad, and you're looking through it, and you're like, oh my God, they're all the same, right? But when you're doing these stats, what you need to do is you need to take the good and the bad. That's how you calculate the hit rate. If it's wrong, if it didn't work, you mark it. It doesn't matter. You mark it. Remember, this is all based on probabilities. It's not because you're wrong. It's because the market either delivered or did not deliver. Okay? Back in them days when I was trading, I used to be like nervous about the fact that I could be wrong. I could be wrong. Now it doesn't matter. It's part of trading. You will be wrong. Everybody is wrong at some point. Okay? I will get stopped out. I know that. I can take the best of the setup. That's why every setup has to be taken with the same position size. You do not vary the setup. You're like, oh, that looks nicer. I'm going to go 5%. Guess which one you're getting stopped out on? The 5%. How do I know? Done that. All right, I'm like, oh, that looks so much nicer than that one, man. You know what? I'm going to go 1% on that. I'm going to go 3 on that. Boom. 3 gets stopped out. 1 hits TP. I'm like, damn. So now now I'm negative. Instead of going, you know what? I'll take 2 here and I'm going to get 2 here. Doesn't matter what it looks like. That creates the consistency. 1 hits TP, 1 gets stopped out. Guess what? Net 0 instead of being down 2%. Right? You learn this over time, but you need to know your stats. You need to know your hit ratio, so that when you trade, you know how many times you're going to hit TP as a percentage. Okay, we talk more about this stuff on Sunday. I'm going to be on Sunday with Jay. He's a fellow student. All right, he's trading really, really well. You can ask him questions. You can talk about his journey. We'll talk more about the journey. It's going to be more like a talk show. So I try to do that. I get guest presenters, which are fellow students, and they'll talk about their journey. All right. Okay, especially the ones that are doing well. So I'm going to bring them in. They're going to talk about the struggles and what they went through, and when the light bulb moment happened, and where they are now, and where they see themselves in the near future. Okay. So the question is this easy? The answer is no, it is not. Can you become successful? And the answer is yes, you can. Will it take a lot of work? And the answer is yes, it will. Okay. If you do sign up, be ready to work. We will show you the way. Okay. And hopefully I'll see you guys next week. But tomorrow we do have a pre-market at 2:30 in the morning Eastern, and Sunday I'll be here as well. Doug. Somebody did ask. Somebody did ask. Can they attend the Sunday session even though they're not a student? Yes, this coming Sunday is free, right? Yeah. Yep. Yep. Yeah. So the question, yeah, somebody was asking a question about is the material the same as 5 years ago, and the answer is no, not really. The material has evolved, is streamlined, and it is, I think, to me, I think it's a little bit more efficient in terms of material, and also kind of dumbed down a little bit, so it's easier to understand and internalize. It Right. Okay. The next question Sean is asking is it possible to do the course effectively and also work a full-time job? And actually, a lot of people are doing that. So they do work a full-time job as well as trade. Oh yeah, yeah. I used to take some time off and in between breaks, and you would look at charts. Yeah, right. It's the hardest thing to do because we like to click. We want to click the button, right? But if there is no set, you can't click the button. It's not a game. You just can't be like, oh, let me click the button and see what happens. That's not the right thing to do. That's not the right business you're in. It's all based on probabilities and statistics. Then you have to pick the highest probability setup and at the correct moment. And that's why they always say patience and discipline is one of the hardest things. We can teach you all this stuff, but if you're not patient and disciplined, you're still not going to make it, right? So there is. Yep, and talking about that. As a matter of fact, one of my guest presenters, his name is Jeff. I'm not going to give you his last name. He's an attorney, and he works a full-time job, but he also trades. He doesn't trade full-time. He trades. I told him to pick 3 days a week to trade so that he's not burnt out because he's working a full-time job as well as trading London because he can't trade in the morning time. He's working, and by the time he gets home, he wants to spend time with the family and this and that. So he's not trading in the evening either, right? Once in a while, you get a chance to trade Asia, but most of the time, you trade London. So he'll get up and trade London, 2 3 hours, take a little nap, then get ready to go to work, right? So that's what he does. And guess what? I can guarantee you he's doing better than most people are that's trading full time. Why? Because he's disciplined and he's patient and he sits and he waits for his set. And there will be days where he has no set. But on average, he does anywhere from between 4 to 6% a week. Now you're like, well, 4 to 6% is nothing. It is a lot. If you think about all those people who are negative after trading the whole week, 4 to 6% consistently since last year is a lot. And he's not taking 20 trades. He's only taking like 2, 3 trades a week. When they set, he takes it. That's it. Why? He knows the stats. He knows the hit ratio on the setup. Like I said, I brought him in as the guest presenter, and sometime this year I'm going to bring him in again, so that he's going to update us on his progress and where he's at and what he's doing and things like that. And it's nice to hear from fellow students that are doing it. All right, I think we should end right now, Doug, because I know Doug loves to talk. I mean, he can talk till like two in the morning, man. You, yes, you. uh, yeah, 2:30 a.m. And also remember, in February on the 29th, we will be doing a session, right? Can I talk about that or no? February February 29th. Did you guys talk about that or no? Yeah, for students, yes. So if you're a student, yeah, if you sign up, yes, you can come. Yes, we will tell you exactly where it is. It is in good. It is going to be in New Jersey. So you can come if you are a part of the student. You get to meet all of us. We're going to be all in one room. Oh, yeah, yes, it is. Doug looks forward to it. All right. Have a great night. I'll see you guys in a few hours, and also on Sunday if you can make it. All right. Take care. Ciao.